Let's talk to Tim Harrison. He's the Head of Wealth Management at Linear Investments. Morning to you, young Tim.
Good morning.
Right, is it Merger Monday?
It would seemingly not be so this morning. I suppose the main news that we've got ongoing is the Shire situation with Takeda coming in with what potentially could be a final offer on Friday, raising the offer by 50p a share to £47 per share, which is still a significant premium to where the shares are currently trading, which would suggest that investors, traders are really sort of cool on the deal being done because Takeda would have to raise a lot of money. The most interesting part is that the latest offer has come up with a lot more cash as opposed to shares, which the previous three offers have been. So that's the only real headline in terms of the M&A front in the UK. So hopefully this week we can have another calm week on the indexes, and hopefully not too many disasters in terms of companies reporting.
Okay, in terms of the big picture, ECB this week?
So we've got the ECB and then GDP figures from the UK and the US back end of the week.
Friday,
so last week, obviously, we saw the Bank of England come out and suggest with the CPI data, etc., that a rate rise potentially isn't going to occur in May. Now, a lot of markets commentators were speculating previously that May would be the month where we would see a rate rise. So that's sort of put on the back burner, which has caused sterling to weaken from the 144 handle down to the 140s. Again, this week with the ECB, I mean, it's probably going to be a maintenance of the status quo, in my opinion, quite simply because at the moment, the markets, the economy seems to just be trundling. There's nothing too aggressive out there, inflation, etc. The key data isn't really pointing towards a need for any sort of intervention. So I'd suggest that we see Mario Draghi just sit on his hands this time.
Understood. And finally, companies reporting, anything you're particularly interested in?
Well, we've had one company update us already this morning, which was of interest to us, Capita. Obviously, they've been besieged with problems over the last couple of quarters. They've come out with the update on their rights issue. The shares are trading circa 9-10% higher on the back of that, which is obviously pleasing considered the market outlook that many people had on the company. The fact that they can get it away is obviously a positive sign. Latter part of the week, you've got Boohoo in the UK, but more importantly, I'd suggest the companies over in the US reporting this week. There is a deluge of data from the big names, the likes of Google's, your Amazons, your Microsofts, etc., which will keep the Nasdaq very simply quite an interesting place to be watching.
Understood. Tim, on that note, thank you very much indeed.